Today we're talking about rare earths. It's a sliver of the metals market that is causing a big global stir. Now, if you want to read the full piece, including all the data and the detail that we won't get into today, just check out the link in the description. Now, let's get into it. Rare earth elements are the kind of thing most people never think about, but they're in nearly everything, from your phone and laptop to EVs, wind turbines, and even guided missiles. These 17 obscure minerals are the unsung heroes of modern technology. And right now, they're at the center of a geopolitical arms race. The US is writing billion-dollar checks, Australia's ramping up processing capacity, and investors are piling in. Some rare earth miners have doubled or even tripled their share prices in just 12 months. It's not just about supply and demand, it's about leverage. So first, let's talk about the basics. The REEs, or rare earth elements, include heavy hitters like neodymium, dysprosium, cerium, and lanthanum. These are what make EV motors run cooler, hard drives spin faster, and wind turbines generate more power with less material. They're essential to clean energy, high-performance computing, automotive systems, and defense. And yet, the total global market is still only around $5 billion. That's tiny when compared to iron ore at $274 billion or base metals at over $550 billion. But don't let that fool you. Rare earths are a paradox. The dollar value might be small, but the strategic value is massive. China controls around 60% of rare earth mining, but the real stranglehold is in refining. Around 90% of the world's rare earth processing actually happens in China. That's the stage where the ore is turned into high-purity materials ready for magnets, electronics, and clean tech. And so it's not just about capacity, it's about expertise. The equipment, the engineering, the trained workforce, it's a moat that's taken decades to build. Even US-based mines like Mountain Pass have historically shipped raw concentrate back to China for processing. Now though, that's starting to change, but it won't be an easy transition. It turns out the term rare is kind of misleading. These elements are actually relatively abundant. What's rare is the ability to refine them economically and at scale. Because building processing plants is expensive, technically demanding, and pretty slow. It takes serious capital, deep expertise, and years to train the necessary workforce. China made those long-term bets years ago, but the West, it didn't. Now, with China clamping down on exports and banning some refining tech altogether, the US and its allies are playing catch-up. And this is not a game that the private sector can play solo. That's why governments are stepping in, and this is where things get really interesting. In July, the US Department of Defense invested $400 million in MP Materials, one of the biggest names in US-based rare earth mining. That deal included a price floor of $110 per kilo for NdPr magnets, locking in demand for a decade. The way to interpret this is that the government is underwriting the supply chain. And it's not just MP either. Other players, like Lithium Americas, have seen their share price skyrocket on rumours of government backing. Meanwhile, Australia is also going well. Local miners there are receiving significant support to build out refining capacity and partner with US and European customers. So the bottom line is that this isn't a typical free market story. It's a story of industrial policy meeting national security. So here's some of the key players to watch. Who's leading the charge outside of China? Well, here's some names. Like we said, MP Materials in the US. They run Mountain Pass, the largest rare earth mine in the Western Hemisphere. They're also building the US's first fully integrated magnet plant. Then you've got Lynas Rare Earths in Australia. It's the only major non-China producer of separated rare earths with a proven track record in processing. And then you've got Energy Fuels, which is in the US and Canada, best known for uranium. They've kicked off commercial production of separated rare earths too. Also in the US, you've got Ramaco Resources, formerly a coal player now pivoting into rare earths and critical minerals. Also in the US, you've got a company aptly named USA Rare Earth. It's a newer player, but it just acquired a UK-based firm with refining capabilities. And lastly, you've got Iluka Resources in Australia. It's already mining and refining and now supercharged with government funding. These companies are now on watch lists across the investing world, and with good reason. So what's the insight? Public funding buys time, not profits. Here's where things get a little nuanced. Government backing changes the risk profile. Price floors and capital injections do help those companies survive and scale, but they don't guarantee upside for shareholders. The dilution risk is pretty real. When governments take stakes, they often buy new shares, not existing ones. And rising costs are still very much a factor, even with price floor guarantees. Add in a healthy dose of buzzword inflation like EVs, AI, and geopolitics, and it's easy for valuations to run ahead of their fundamentals. So here's the takeaway. Execution still matters. The biggest opportunities lies in companies that aren't just digging up dirt, but refining, processing, and integrating it into a full supply chain. At Simply Wall Street, you can track these companies, build a custom rare earths watchlist, and set fair value estimates so you know when to buy, hold, and sell based on your estimates. You can use our analysis tools to stay ahead of the noise, cut through the hype, and spot which companies are just riding the wave and which are building something sustainable. And that's where we'll wrap up this week's Market Insights. Again, if you'd like to dig deeper into this piece, the full article is linked to in the description. As always, if you've got feedback or questions, we'd love to hear from you. We'll be back next week with more Market Insights. Until then, invest well.